All right. Thanks, Doug. Thanks, everybody, for joining us this morning to learn a little bit more about Equinox Gold. I'm Rhylin Bailie. I've been the VP Investor Relations of Equinox Gold since 2016. It's my pleasure to spend the next 14 minutes telling you about the company, our upcoming milestones, and the long-term growth strategy that we believe will make Equinox Gold the premier America's gold producer. Of course, lots of forward-looking statements today, so please do visit our website, SEDAR, and EDGAR to learn more about the company. For people who are new to the company, I'm going to spend a few minutes looking back at the last 6 years. The Equinox Gold that you see today really began at the end of December 2017, when Ross Beatie joined us as our chairman and our largest individual shareholder. Since then, we've achieved tremendous growth, and we've been working hard to make Equinox Gold into a diversified, America's-focused gold producer. We've achieved this growth through strategic M&A and also by building basically one mine every year. We started with the acquisition of our Mesquite mine at the end of 2018, which gave us our first gold production. In 2019, we built our first mine, the Aurizona mine in Brazil. In early 2020, we acquired Leah Gold Mining, which gave us a portfolio of mines in Brazil and also the large-scale Los Filos mine in Mexico. At the end of 2020, we completed construction of our second mine with phase one of our Castle Mountain mine in California. And then in early April 2021, we acquired Premier Gold, which gave us a small operating mine and some highly prospective exploration properties, but most importantly gave us a 60% interest in the large-scale Greenstone mine in Ontario, Canada, that we're building right now. Through 2022, we focused, Through 2022, we focused on, how do I go backwards? There we go. Through 2022, we focused on construction at Greenstone, and we also completed our third build, bringing our Santa Luz mine in Brazil into production. Along the way, we spun out our copper portfolio into Solaris Resources. We participated in the formation of I-80 Gold and Sandbox royalties, and we optimized our portfolio by selling some of our smaller scale mines and projects. So in less than 6 years, we have grown from a single asset developer to a diversified gold producer with 7 producing gold mines. We're 90% way through our fourth build with Greenstone, and we've got a clear path to produce more than 1 million ounces of gold over the next few years by developing our pipeline of expansion projects. It's certainly been an incredibly busy few years, to say the least, but that work has translated into growth in our reserves, which have increased from less than 1 million ounces to nearly 17 million ounces of gold reserves in the ground today. And it's also increased production growth. We've grown from 20,000 ounces to almost 600,000 ounces of gold that we'll produce this year. But we're only halfway to our target. You can see from the light blue bar on the right-hand side of this chart that we're going to almost double our production over the next few years. And it's that growth potential that makes Equinox Gold stand out from its peers today. These 4 graphs show how we show compared to our peer grouping using analyst consensus figures at the end of August. You can see from the 3 graphs on the left that Equinox Gold is very well positioned relative to its peer group in terms of total reserves, where we're second from the top with nearly 17 ounces of gold reserves in the ground. We've got the highest production growth of our peer group with over 60% growth expected over the next 2 years, and we're very well positioned for expected production growth by 2025. We expect to produce close to 600,000 ounces of gold this year, which makes us a solid mid-tier gold producer. Yet you can see from the right-hand chart that we're lagging our peers in terms of valuation. We're trading at the very low end of our peer group on a price-to-NAV basis. The biggest reason for our current valuation is because we have a large construction project underway, and the market today doesn't really value growth. We've also been using leverage in a tough market and with high inflation, of course, and that inflation has certainly hit our costs. Also, almost half of our net asset value is tied up in growth, especially Greenstone and Castle Mountain. So even though we're a mid-tier producer from a production perspective, with 3 big development stage assets in our portfolio, we're basically trading at developer valuations. So our job now is to deliver Greenstone on time and on budget next year, to continue to optimize our producing assets, and to deliver the production growth that we've promised from our expansion projects. And every time we achieve one of our milestones, we're increasing production, increasing our cash flow, reducing the risk that's built into our stock price right now, and we should start to climb our way back up this valuation ladder. And the biggest step change in the near term is going to come in the first half of next year when we complete construction and achieve production at Greenstone in Ontario. We own Greenstone in a 60-40 joint venture with Orion Mine Finance. Greenstone will absolutely be a flagship asset for Equinox Gold. It will be one of the highest grade open pit gold deposits of scale in Canada, with an initial mine life of 14 years and producing over 400,000 ounces of gold per year for the first 5 years. Our 60% share will give us 240,000 ounces of gold per year. So we're going to jump from around 600,000 ounces this year to over 800,000 of annual production, assuming our other assets continue to perform as they should. And Greenstone will also be our lowest cost gold mine. So it's going to give us a big boost production, a big boost to cash flow, and it will significantly decrease our consolidated costs, which of course are all very positive for the company and should result in a revaluation. Greenstone is sitting on 5.5 million ounces of gold reserves today, with exploration potential and substantial opportunity from an underground deposit that has another 4 million ounces in indicated and inferred resources that's not built into our current mine plan. So Greenstone is going to be a long-life mine, and achieving production next year will absolutely be transformational for Equinox Gold. Unfortunately, pretty much every single mine that's been built in Ontario in the last 10 years has had big problems. So the market has been very skeptical that anybody can build a mine in Ontario on time and on budget. That's why you see priced into our stock today. We started construction in October 2021. We're 90% complete, and I'm very happy to report that the project does remain on time and on budget. At the end of Q2, we'd spent $937 million on a 100% basis, which is 76% of the overall budget, and we're on track to pour gold in the first half of 2024. Our percent of that remaining spend is $170 million. Construction is going incredibly well. We brought 20 analysts and investors to site last week, and it was really fantastic to see the progress in person. The site is showing really well, and you can feel the team's enthusiasm as they get closer and closer to production. The site tour deck is posted on our website if you want to read all the information that the analysts and investors received, and I also encourage you to check out the construction photo gallery on our website. We post new pictures there every week. Overall, the project is 90% complete today, and pre-commissioning is underway in a number of areas. The natural gas pipeline to site is commissioned and operational. The power plant is effectively complete, and we'll be switching from grid power to the power plant by the end of this month. The process plant is 84% complete. The ball mills and conveyors are installed. The crushing system is substantially complete, and pre-commissioning is underway. The tailings facility is on schedule to be complete and ready to use by the end of the year, and a lot of other infrastructure, including the truck shop, warehouse, water treatment plant, fuel stations, and some of the off-site infrastructure is complete and has been handed over from construction to operations. Hiring for the operations team is going really well. All senior positions have been filled, and we're on track to fill all positions that we need by the end of the year. Of the positions recruited to date, 43% are from local communities, 35% is from the general region, and 31% are Indigenous. We also have 24 contracts with Indigenous businesses, which represents about 20% of the total contracts that have been commissioned to date, which reflects the team's commitment to working closely with our community partners and Indigenous partners. The key to success now is maintaining productivity. We need to get the mechanical, piping, and electrical complete so that we can start commissioning the process plant in Q4. Mining has started to transition from waste to ore so that we can start building the stockpile, and then we'll be ready to start hot commissioning early next year so that we can achieve first gold pour in the first half of 2024 as promised. The first question I always get is, when do we expect to achieve commercial production at this site? And we'll be providing more clarity on both our production and our cost estimates for 2024 when we give our consolidated guidance in February next year. Moving south, in addition to Greenstone, we have 7 operating mines in our portfolio today that this year will produce around 600,000 ounces of gold at an all-in sustaining cost of around $1,600 per ounce. In the U.S., we have our Mesquite and Castle Mountain mines, which are both open-pit heap leach operations. This year, our U.S. operations will contribute more than 100,000 ounces in production. In Mexico, we have our Los Filos mine. Los Filos is currently operating as a large open-pit and underground heap leach operation, and for 2023 will contribute around 160,000 ounces of gold. And then in Brazil, we have 4 operating mines that collectively will produce more than 300,000 ounces of gold this year. Within our portfolio, in addition to Greenstone, we also have 3 substantial expansion projects. At Castle Mountain in the States, we're currently permitting an expansion that will take that mine from around 20,000 to 30,000 ounces this year to more than 200,000 ounces per year over a long 14-year mine life. We hope to receive those permits in 2025 so that we can essentially pivot from building Greenstone and go right down to start construction at Castle Mountain. At our Aurizona mine in Brazil, we're completing a feasibility study that incorporates the addition of both an underground deposit and some extra satellite open pit deposits that would let us increase annual production to around 140,000 ounces of gold per year. And it would also let us extend that mine life to around 11 years. We have already received permits to construct development ramps, and we expect to start portal and ramp construction sometime next year. And finally, at our Los Filos mine, last year we completed a feasibility study that supports the construction of a new CIL processing plant that would let us process the higher grade underground ore in the CIL plant rather than putting it on the heap leach pad, which would improve recoveries, increase production, and take production at that mine to well over 300,000 ounces of gold per year. Collectively, Greenstone and the other expansion projects will add around 575,000 ounces of annual gold production. And the thing to remember is that all of that growth is already built into our portfolio. I think this slide really highlights why Equinox Gold represents excellent value today. We have all of the projects and plans in place that we need to nearly double our production over the next few years. And every time we finish one of those projects, we're increasing production, increasing cash flow, reducing our costs, and reducing the risk that's priced into our stock. And that's the investment opportunity today. That's how we're going to take Equinox Gold from the left-hand side of this chart, trading at about half the average price of our peers, to the right-hand side of this chart as a profitable, sustainable, million-ounce-a-year gold producer. We've already created a diversified Americas-focused gold producer with a solid business in Canada, the United States, Mexico, and Brazil. And when our expansion plans are complete, our production and our reserves will be divided almost equally between these 4 mining-friendly jurisdictions. In terms of our balance sheet, we remain well-funded with cash on hand, available credit, and operating cash flow from our 7 producing mines. At the end of Q2, which was our most recently reported quarter, we had $174 million in cash, almost $130 million in available credit, and an accordion feature that would add another $100 million should we need it. We also have a portfolio of equity investments worth around $140 million, and on top of that, again, we have the operating cash flow from our producing mines. We've also worked really hard to increase our resiliency over the last year. Costs have increased and the gold price has been volatile as we've been building Greenstone. So we've taken incremental steps to enhance our funding capacity. We adjusted our bank covenants. We put in a hedge collar for around 25% of production over the next year while we complete the build at Greenstone. And we've also implemented an at-the-market facility that we can tap if we need to. So at these gold prices, we're fully funded to get Greenstone in production, which is, of course, our priority, but it's nice to have a few protectionary levers in place that we can pull if we need to. Of course, none of our plans will be successful unless we're being good corporate citizens and bringing value to our community partners and doing the right thing for the environment and from a governance perspective. We published our 3rd ESG report in May. We also published our first water stewardship report this year and our first climate action report, which lays out our plans to reduce our greenhouse gas emissions by 25% by 2030. All the reports, which summarize our performance, our targets, and our strategy, are available on our website. Our board and management team are well aligned with shareholders. Ross Beattie is our largest individual shareholder, holding around 8% of the company, and all of our directors and the majority of our management team have invested personally in the company, many with very meaningful positions from a net worth perspective. And many of our employees are also participants of a corporate share purchase program. So you can see by the right-hand chart on this page that we actually have one of the highest levels of insider ownership in our peer group. We also currently offer the highest leverage to rising gold prices of any of the mid-tier producers. We've seen that in action over the last year. Our share price certainly jumps every time the gold price starts to move. And we've also got substantial growth built into our portfolio. All we need to do now is execute on those plans. We have step change growth coming very early next year, or in the near term when we achieve production at Greenstone. And looking forward a few years, we'll have an enviable operating platform of long life gold mines of scale with Greenstone in Canada, Castle Mountain in the United States, and Los Filos in Mexico, plus our operations in Brazil. So that's Equinox Gold in a nutshell. Unfortunately, no time for questions, but you can always reach out to me and our CEO, Greg Smith, if you'd like to learn more about the company. Thanks.